Brazil's economic indicators suggest a nation on the rise. Unemployment is at a historic low, GDP growth is strong, and consumer income is increasing. Yet financial markets tell a very different story. The Brazilian real is plummeting, borrowing costs are climbing, and market confidence has been in free fall for months. What's fueling this apparent contradiction? And more importantly, can President Lula and his economic team recover credibility? My name is Gustavo Ribeiro. I'm the editor in chief of the Brazilian Report, and this is Explaining Brazil.
If you like Explaining Brazil, you should subscribe to our website, The Brazilian Report, which is the journalistic engine behind this podcast. Or you can go the extra mile and make a donation to our newsroom, tipping our journalists via our Buy Me a Coffee page. And you can also subscribe to our Buy Me a Coffee fan page, pledging a monthly contribution to our newsroom in exchange for exclusive content that you won't find anywhere else. Our Buy Me a Coffee subscribers are Andrei Novoseltsev, Wild Rice, Jaciara de Oliveira, Carson Allen, Gabriel Luca, Pan Ludwig, Leslie Seal, Mark Hillary, Louise Renz, Erwan Menais, Aaron Berger, Kars Vrieswick, Alistair Townsend, Miller Renarcido, Peter Abramson, David Dixon, Jose Ozi Stankovic, Emerging Market Muser, Anna Lund, Peter Suffren, Anderson da Silva, and someone who chose to remain anonymous. And our Buy Me a Coffee members come from all over the world, so please, if we're butchering the pronunciation of your name, please send us an email. If you too believe in the importance of independent journalism, and if you want to hear your name on our podcast, go to buymeacoffee.com/Brazilian Report and subscribe to one of our membership levels. Click on buymeacoffee.com/Brazilian Report to find out more.
This week, I'm joined by Sergio Lima, Chief Brazil Analyst at Medley Global Advisors. Mario, thanks for joining us again.
Thank you. Thank you, guys, for having me again.
Mario, the US dollar recently breached the mark of R$ 6 and has stayed there. And this was unthinkable not very long ago. Yet, here we are because markets are frowning upon a recently announced austerity package. And a brief recap for our listeners. After teasing an austerity plan for weeks, Finance Minister Fernando Haddad announced ways to limit spending growth. But not only did many economists say the proposed cuts are insufficient to tame the public deficit, but they also complained that the government embedded a populist measure in the same announcement, saying that it plans to raise the income tax threshold to benefit the lower middle class. So can you tell us a little bit more about Haddad's announcement and why an austerity plan turned into a confidence crisis?
Yes. First of all, I think the problem is they according to a Lula decision, they needed to have a joint package in which they would do the fiscal austerity measures alongside the measures to the more populist measures, which although the government says it's fiscally neutral, it may not be fiscally neutral because historically we have lawmakers accepting to do some sort of beneficial measures, the popular measures, but do not pass the compensation. So it may not be fiscally neutral. And it was a mistake. By any means, any way you slice it, politically or economically, it was a mistake. First of all, they spent more than a month trying to set a proposal, and the proposal seems rather insufficient, like you mentioned. They say that they aim to save 70 billion reais in 2 years, but there's reason to believe that the measures announced will not get to that full amount. It will probably be around 50 to 60% of that. And even 70 billion seem like underwhelming. So when you add this with a populist measure, what you're saying to the markets is that we're not really committed to deliver a fiscal surpluses that would put the public debt in a sort of sustainable level at some point, like growing and then starting to converge down. So it was I would say like a cold shower to everybody that was expecting more from the government. And also, it undermines the Haddad's stance within the cabinet as he was defending the measures that would be aiming at cutting expenses, and seems like he was trampled by the rest of the cabinet in Lula's decision. So for an investor, you're basically looking at Brazil and saying, well, I mean, if those guys are not even committed to the limits of the measures in the shortest term, can you imagine for 2026 when there's a presidential election and you have a lot of retrospect of presidents really breaking the those years to try to get re-election? So it's people are expecting that it's going to be even less than what's announced when push comes to shove.
Now, the left is complaining that the markets have an anti Lula bias and that investors would find this austerity package insufficient no matter what the government was announcing. Now, do you think that's a fair assessment? Because, I mean, given that last year's the government expanded public spending by the largest margin in 25 years, uh, it seems like a half truth because despite this massive increase in public spending, markets gave Lula a pass, believing that the administration would find its way toward fiscal responsibility, especially after Haddad completed a fiscal framework to control the deficit, articulated a tax reform, and fought to reduce tax benefits for companies, even if in that last battle I mentioned, he lost an arm wrestle with Congress. But so, do you think it is fair to say to just dismiss what we're seeing as the markets have an agenda against Lula and against spending on social welfare?
I mean, I would say that there is a somewhat of a truth into there is a bias, but it's one of those things, if you know that there's a bias, you try to do as much as you can to do not allow them to have the final word. So if the government actually proposed a package, even if it was deemed insufficient, I would say that Brazilian real and Brazilian assets would probably be trading at a way more behaved way now. But the way that they just like completely overran this with this tax exemption, it was like basically you guys are more concerned with popularity than you are of actually tackling the fiscal imbalances. So I mean, they gave even if there's a bias, you actually gave credence to everybody that believed that you wouldn't do what's needed, and you actually made a mockery out of the people in the market, especially the foreigners who actually believed in you, who actually believed that there was a chance that you would be responsible. So, in a sense, people are in the markets are basically like in a "I told you so" mood towards those that actually believe the government. So it was a shot in the foot.
Now, we agree that no president should govern for the markets, but that it may be also extremely reckless to govern against the markets. And this is what Lula's seemingly doing at times. He has excessively gone for a class war rhetoric, and he has painted markets as enemies of the people and repeatedly dismissed the need for spending cuts. Uh, Now, some say Lula is just being Lula and that his rhetoric was often far more leftist than his previous administrations ever were. But I mean, you deal with investors daily. How are his words being received by people looking at Brazil for investment?
I think that it's one thing that you have that rhetoric, but when you're delivering, when you're showing commitment, you're actually, words do not matter that much. Market was very stressed when Lula was saying that, oh, maybe we should have a higher inflation target. Last year, they didn't change the target. So, and then market really improved a lot. So people kind of like expect some sort of pushback in terms of rhetoric. But the thing is now, it was, I don't think that the government actually understood. I mean, Haddad does, but the full cabinet understood that this was where we're basically like heading to a do or die situation in terms of fiscal. Because if you do not do this, any sort of adjustment now, we're probably looking at a stronger adjustment in 2027, which tends to be the year in which those unpopular measures are tested. You can look, for instance, in Argentina with Milei. He was way more radical than I expect any Brazilian government to do. But you usually do that in the first year of your government because you have room to grow after the unpopular measures. You still have some grace period, and they missed the grace period, I would say. And now basically what they didn't really look into some measures like you what would be important was whether you would delink, for instance, the growth in minimum wage. There's a real growth in minimum wage, meaning that it rises above inflation. If you would just review this, they did somewhat, they put this a limit to this, but still somewhat generous limit. But they did not delink it other expenses that are linked to the minimum wage, such as there's a one pension system called the BPC, which is basically pensions for people that got, I don't know, injured while working and can't work anymore, or people that are just they were always informal workers, never contributed to the pension system, and then when they reach the retirement age, they need to have some support. So while it's, of course, it's only humane to give them this support, maybe they do not need to get, in economical terms, actually get the same gains as the people that are currently working at the workforce and are earning minimum wage. So maybe there were things that could be done that weren't. So I mean, it does really seems like the government's really not taking this very seriously. I mean, unemployment benefits are going through the roof this year. When we have the lowest unemployment levels recorded, so it doesn't make any sense. There were things that need to be done in terms of redesigning the unemployment benefits, but they failed to do so. And then they decide to just like sugarcoat the message with a positive, a populist measure, which is like it came like so extemporaneous, so out of the left field, that I would say that market levels now are very, very fair, I would say. At some point, I was saying that there was exaggeration because there was a lot of uncertainty. I would say that now that you have a certainty that they are not fully committed, I think the prices are where they need to be. And I don't see the need for now for the central bank to actually intervene in the market, start selling dollars, or doing any sort of auctions to try to soften the blow. I think you actually need to put risk at where is at. And it's sad to say because all of those damages were self-inflicted by the government.
Now, I mean, you bring to my next question, which is the fact that Lula and the Workers' Party have lost the benefit of the doubt. And I was meaning to ask you how much of that is linked to errors of the current administration. And I would cite not waiting for the ink of the fiscal framework to be dry before asking for laxer spending limits. And how much of that is a consequence of the 2014-2015 crisis? So, for our listeners who are not aware, at that time, Brazil was governed by Dilma Rousseff, a Lula ally who enacted a disastrous economic policy that ultimately led to the worst recession in Brazilian history, barring the pandemic.
Yeah. There's, of course, I don't think that they fully understand that they have to pay a premium already because of the Dilma years. But you have to remember that Dilma was very much was a keen defender of just boosting the economy through public expenditure. Which, I mean, okay, you may believe that that's the thing that you need to be, but you actually need to go way earlier than that. When we had the economic crisis in 2008, 2009, Brazil actually came somewhat unscathed by it due to the fact that actually the government really pumped the gas in public expenses. At that moment, you would say that that was a counter-cyclical movement, which made sense. Economy is depressed. Maybe you need to take some pages out of the old John Maynard Keynes book. Everybody does it. They did in the pandemic. So I mean, it's one thing to be counter-cyclical, but just as you mentioned when you opening, where actually the growth has been sustainably better than everybody's expecting. Just today, we had the GDP, which was better than market expectations. We have lower unemployment. So in this moment, really, the government should be counter-cyclical, meaning the government should be taking the foot out of the gas and letting this moment actually to in a way as of a cool down of the economy that would allow you to put inflation to target, which is something that's very important for businesses and families alike. And then we would be growing it in a more sustainable path. So if there was a moment where the government should be taking the removing some of those fiscal pushes, it should be now. So by virtue, they will probably have a higher GDP result than people were anticipated, but at what cost? At higher inflation, maybe inflation would breach the target this year. That's not a good indication. And we have seen in the US recently that inflation is something that can really be a kingmaker in an election. So maybe the government should be careful, because if they want to be popular to the point that they win re-election or the Lula passes the torch, they would really need to tackle inflation. And from what we're looking now, the only way that we're going to accomplish that is with higher and higher rates, which will depress the economy even more. So, like I mentioned, does the cost really pay? Because Dilma had a lot of very good results in her first term, and everything came back with a terrible 2-year recession after the stimuli was removed. So they should have learned from that mistake.
Right. And to add to your point, I mean, currency devaluation impacts inflation, like you said. And in a recent report, the Brazilian Institute for Applied Economic Research showed that inflation is already accelerating for the poor amid rising costs of electricity and food. And last year, the World Bank said that rising food inflation is directly linked to a worsening outlook of food insecurity in Brazil, despite Brazil being a global agricultural powerhouse. So my point is, Lula wanted to embed this populist measure of raising the income tax threshold in order to avoid a political backlash. But as you said, if inflation rises, then that backlash will be there. Uh, what are the risks for the Lula administration, given how uncooperative Congress has been and how strong um, the hard right and the far right are in Congress?
I would say that there's the writings on the wall. If when you look at this proposal, or this income tax proposal, first of all, you anticipated the announcement. Now, I would say that there's a very big contingent of low information voters, which are which could be benefited by these new tax brackets. And I mean, since the announcement was now, they would probably expect that they will be paying no tax or lower taxes next year. And that's not going to happen, because this will only be voted next year. So it's like, you have to remember that specter of people of income brackets, they are among the ones that least approve Lula. So it's far easier for them to just take the sort of rhetoric from the right and the far right disinformation pieces, when they have to pay tax and say, "Hey, Lula tricked you." So I mean, I think that would backfire. That will backfire politically. First, second, the Congress may not even act upon it, because let's be honest, if Lula is unpopular as it is, Congress will probably be looking at another candidate, and they have no incentive to actually help Lula pass this legislation. They could just hold this and approve in 2027, for instance, or whether the non-approval of that is the only thing holding the Brazilian real to a non-unsustainable level. So I would say that it was a political mistake, like I mentioned, not only an economic mistake, but a political mistake, because it's like when the dollar is overshooting on the real, when inflation is higher, people actually, no matter of which walk of life, people would consider that those are signs of a poor management of the economy. So even if that's not the case, the proof is in the pudding. Like, people are actually, our lives are getting worse. So that's it.
Now, they say that it takes years to build trust, seconds to break it, and forever to restore it. Uh, Lula doesn't have forever. He has 2 more years in his term. Do you think it is possible for him to recover this lost trust from the markets?
It is, but the pill that he needs to be swallowing will be even more bitter. That's the thing. So unless he actually puts a set of proposals that would be seen as sufficient, and like I said, I mean, at some point, even if they're insufficient, you may have some goodwill to say, okay, they're doing something. Let's just wait a couple of more years. Brazil was on the verge of an upgrade at Moody's to an investment grade level. I would say that this is completely out of the table now with those measures. I think they would need to do more. So, okay, if they do some more measures and global economy somewhat improves, which is a very, at the moment, less likely scenario with Trump and a tariff and trade wars, it's probably going to be inflationary, and also work with to reduce the impetus of growth globally. So it's a difficult moment, and especially in difficult moments, in difficult global scenarios, you need to be you need to have your house all your bed need to be made. Your house needs to be tidy. And if it's not, you'll probably suffer more than you would. So I'd say there's time. Yes, there's time. They need to do. I don't think that most foreign investors are actually asking that much from the government. You may the locals may be asking more, but the rhetoric of markets not going to be satisfied. I don't think that's true. I think there's room to improve. But if they wait longer, the path for that is like doing even more measures to the point that maybe it's too much for a left-wing government to do. So it would be just better to make some adjustment now, because let's be honest, if they lose the election and for a more pro-market and pro-reforms government, they don't have the same type of commitment to the lower classes, so they could just as easily do a very strong set of measures, just like, for instance, Milei's in Argentina, and I mean, they wouldn't bear the brunt of unpopularity. So maybe it's better to have a little more popularity now and do the right thing, and actually don't need to go all the way, than actually allowing your opposition to go all the way and reap the benefit.
Now we are seeing market expectations worsen every week, and some market agents believe that the Brazilian central bank could raise the benchmark interest rate, which is already at 11.25%, by as much as 1 percentage point in December. Do you agree with that notion?
I see a lot of merit in that. I would say that if Bacen did that, that would probably be a positive shock towards inflation. That would probably do wonders with the Brazilian real, because it would show a strong commitment. But I don't think the central bank, I'm still in the camp of a 75, which is already a pace increase, because I feel like Bacen doesn't want to be that aggressive to the point that maybe they overkill the economy. So I think like they rather take a more careful approach. But even then, you're probably looking at a cycle that has at least 3 to 4 new heights next year, heading towards 14% level, which is a very restrictive monetary policy by any means, any comparison measure. But I mean, since the rate differential will be there, it will probably help alleviate the bloodbath that we're seeing in the markets. I don't think that 100 basis point is out of the realm of possibility. I actually think there's a very good argument for that. I would argue that that would be the best decision. But I think I think they rather take a little more measured approach. And I also understand this, because they if they make a mistake, they have to wait 45 days to correct it. It's while markets can be repriced daily. So maybe I think they will eventually go to the more measured approach.
Now, we are weeks away from Donald Trump's return to the White House, and analysts overwhelmingly believe that the global outlook is becoming more uncertain. And I mean, just this weekend, Trump threatened to slap 100% tariffs on BRICS countries that attempt to trade goods in currencies other than the dollar. And de-dollarizing trade is one of Lula's key talking points when in international fora. To what extent does the global scenario make the situation in Brazil even more delicate, with all these local issues that you have been talking about, but we also cannot decouple them from the global scenario?
I mean, the global scenario is going to affect everybody, of course, but it will affect more and more negatively the ones that do not have their house like I said, the austerity. So if Brazil is seen as a nuisance, as some sort of a problem, I don't. People would just say, "Hey, the risk doesn't pay." I would say that money doesn't take offense well. So if they feel like Brazil is not doing what it needs to be doing, they will probably be looking elsewhere. There's Argentina, maybe there's depending on how Trump navigates, maybe Mexico would be interesting. Other EMs, India, or maybe even going. I think a lot of people will be going to the US because there is a sense. I do not share the view, but there's a sense that the United States is probably going to go into some glorious years now. So if that's the case, you probably need to be allocated there as it is. Maybe you wouldn't have a major flow or outflow to outside of the US. It's it's a situation in which Brazil should be taking advantage because Brazil doesn't have, even if the US is a relevant partner, it's not our biggest. So Brazil can actually navigate better the type of, if Trump just left like a 10% tariff to every country, Brazil is kind of like well positioned comparatively. Brazil still produces a lot of goods that are not going to be out of interest parties. We produce food, so I would say that Brazil would probably could be rather unscathed by a more difficult situation globally. But as it is, Brazil is also becomes frail, and that's never a good place to be when there's uncertainty.
Mário Sergio, thank you very much.
Thank you.
Mário Sergio Lima is the Chief Brazil Analyst at Medley Global Advisors. And if you like explaining Brazil, please give us a 5-star rating wherever you get your podcasts. It takes only a second and it really helps us reach a broader audience. Or better yet, subscribe to the Brazilian Report, the journalistic engine behind this podcast. We have a subscription-based business model, and your memberships fuel our journalism and keep us going and growing. Our work has been recognized for its quality, and we have won several international journalism awards, such as recently being named the best news website in the Americas by the World Association of News Publishers, (ONE-IFRA). And to continue this work, we need your support. Go to Brazilian.report/subscribe. I'm Gustavo Ribeiro. Thanks for listening, and Explaining Brazil will be back next week.